Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts. And so this is overnight market prep for Wednesday, May 28th, getting ready for Thursday, May 29th. And, the theme for today's video is going to be taking profits. I feel like there are some nice examples over the past couple days. Whether you want to take profits on shares or contracts, I think it's good to have a plan for that. And one of the things that I personally have found very difficult about taking profits, especially when getting into stocks with strong communities like AMC, GameStop, and whatnot, is that, it kind of hurts. To take some profits. You want to stay in that community. But in all honesty, if we're in a stock and you feel that it's best for you to take profits, I think that is a great thing to do. And I feel like I said, there are some nice examples that I wanted to go over. But before I get into the usual tickers here, I just want to go over the list following the crypto ones that I go over. I will be covering Lithium Americas, ticker symbol LAC. It did come back to a level I had previously talked about. Also, I will be going over uranium, OCLO, because I think I might want to take profits on that soon. Kind of the theme of the video. And also GameStop and AMC yesterday, I think were nice examples to be taking profits, but I think that can lead to FOMO if they do continue to rally. So I'll be going over some possible scenarios with those. Unity Software, ticker symbol U, went on a nice rampage today. The Bronx Viking was posting about some unusual whales activity, so it'd be nice to look over at that. And then I will go over at ChargePoint because that has kind of been a fan favorite. And, it did close above a level I had been keeping an eye on. But yeah, let's get into the usual tickers here. First, beginning with UVIX, which is the 2X long VIX futures ETF, which closed today at a price of $29.01, being up about 2.5% on the day. I was feeling pretty good, thinking that this might be going up. But, we had NVIDIA earnings after the close. Also, in the afternoon, I believe we got the notes on the most recent FOMC meeting. All of that seemed to get the markets to go up a little bit, which means the UVIX, the volatility pulling back some. And then, of course, I'm sure you guys are all aware that we heard that some courts ruled that Trump's tariffs are unlawful or illegal, something like that. And so because of that, the tariffs have caused a lot of volatility. So if they're illegal, things are going to calm down. But I think there's going to be some back and forth, and that volatility will continue to go up and down. So always good to hedge the markets with something like the UVIX, which I like to do. Currently, have a pretty small position, nothing too crazy. I should note, too, that it does look like, as I'd mentioned yesterday, that it did get rejected from right around $36, so right around this downtrend. Didn't quite get to this gap, so that is still yet to be filled. But the VIX did fill the gap that corresponds to that close over here from the 9th of May. So maybe that gap won't be getting filled on the UVIX. I suspect it will later on, though. But with all of that news of tariffs being illegal, all that stuff, I did have this alert go off maybe an hour ago. I'm not sure exactly, but that alert is for below $27. As we can see that in the overnight trading, it is below 27. And so I'm just going to flip over to the 10-minute time frame so we can look at that really quick. Does look like we hit a low in the overnight trading of 26.50, getting below that alert. And yeah, we will see where it goes into tomorrow for tomorrow night's overnight market prep. But yeah, just looking at the daily, I do have this purple line here at $25. I do think that it could be dipping down to that level. And also, I should note this. I was thinking about this right before starting the stream. I do have this doodle up here that is in the past clearly, and my estimation of getting up to this level was a little ambitious, that it'd be happening a little bit sooner than it did, but it effectively did happen over here. If we just stretch this little horizontal bit out a bit, it did go up there. So I think that's pretty neat to note, but I am going to delete that doodle and then move on to the next one, which is the VIX, the Market Volatility Index, the VIX. And this did close up about 1.85%. So not up as much as that 2.47% as the UVIX. That's kind of why I like it better. Even though it's not exactly 2x, it does give you a little bit more exposure, but that's not only to the upside, also the downside. And so I should note that the VIX did close today at 1931. Maybe I already mentioned that, being up 1.85% on the day. Maybe we're going to see a bounce here or something like that, but with the news overnight in the UVIX, which you can't see it because Ed's in the way, it is down 8% over here, you can see, in the overnight trading. So if that does persist into the pre-market, into open, the VIX will be opening lower, maybe coming back down to right around $18. I do believe I have talked about that level before, corresponding with this retracement, but I think I mentioned it yesterday. I think price could be breaking below 18, maybe coming down to around 15. So good to be keeping that in mind. And so now, with the thought of the VIX pulling back some, let's flip over to the upside and look over at the SPY. This is the S&P 500 tracking ETF, which closed today at a price of $587.73. being down about $3.42 or 0.58%, but it is bouncing in the overnight trading. Looks like around $597, whereas the high for the day during market hours was $592.77. So this bounce in the overnight, is a pretty notable one. And the highs over here, actually the high here from May 19th, that was $595.54. So if we do look at the 10-minute time frame, we'll be able to see that we're at highs we have not seen in quite some time. And I actually have to switch this over to the 1-hour time frame to really show this, that the highs that we're seeing are higher than what we saw over here. But I should also note those are not the all-time highs. That would be getting up to around $611.39, which maybe we see by the end of this week. Wouldn't it be crazy if Friday we see a close at an all-time high or an all-time high close? And so the close over here, I guess I should note, on February 19th, that was at $611.09, so 30 cents below that all-time high here for the SPY. But then, looking over at the 10-minute time frame, we can see the market hours trading. We did hit a high of, $592.77 right around here. Did pull back, bounced a little bit from this yellow line here, right around $589. Fake out break below it, though, hitting a low. It looks like right at close or at the start of the after hours trading around $586.90 low before bouncing, reclaiming that yellow line, as well as I believe this line is a doodle. Maybe that's a trend line, though. Let's just switch over. Nope, that's a doodle. That's a doodle. That white line there, so that's not really significant. And then, kind of launching up following the news of tariffs and whatnot, and that possibly being illegal, consolidating here, hitting that high of $597.73. This looks like a bull flag. Move up consolidation. So we will have to see where the SPY takes us tomorrow. I kind of like the idea of Friday hitting all-time highs. I think that'd make some headlines over the weekend, get people back in the zone to buy the top before maybe a pullback, or for it to just continue higher, to prove everybody wrong who panic sold on that fateful day of April 7th when markets hit bottom. At least I know that's when Bitcoin hit bottom. But April 7th, the SPY was at a low of $481.80. So anybody that sold, they're thinking, hey, we're in a bear market. A month later, I guess that'd be 2 months. 2 months later, would be finding out, hey, all-time highs. We're not in a bear market. I sold the bottom. So yeah, I mean, markets play with us. That's what they like to do. And so good to be thinking ahead. I like the idea of new all-time highs. And with that being said, the SPY, I don't think new all-time highs on this one are going to be that significant, but looking over at the SPX, which is the S&P 500 index that the SPY is based on, the SPX closed at $5,888.55. I don't know about you, but the repetition of numbers here, the 3 8s, the 3 5s, gives me a nice little feeling. So maybe that's a good sign. Maybe it's a good omen. None of those numbers are 6s, so I think that's a really good sign. But we can see that the price did pull back about $33 on the day, to be precise, $32.99, coming down about 0.56% on the day. No after hours or overnight trading on this one, at least not the way that I'm viewing it. But considering that the SPY is up, I think that suggests that the SPX will be opening up higher. And the high over here from the 19th, let's just make sure that does correspond, with the same date over here for the SPY. The high over there is $5,968.61. But just like the SPY, I imagine that's not the all-time high. If we do take a step back, that all-time high is at $6,147.43. So let's see if we do get up to that level by close Friday, because that will be making some massive headlines over the weekend with this V-shaped recovery. We are back in a bull market. So I'd be very curious to see if that does happen. But anyways, let's flip over to Bitcoin now, looking at some crypto here. Bitcoin is currently trading around $108,000. Always kind of tough for me to keep track of, where Bitcoin's at, because it's just such a big number, and, I feel good about it. But still, hanging out right around $108,000. I have suggested that could be an important level for us to maybe hold as support, but that we could potentially be getting a dip down to around $105,000, maybe a little bit lower. I do have the cursor here corresponding with the candle and the wick highs over here. That's around 107. We did get a wick down to that level today, it looks like, but maybe coming down a little bit lower, getting to this consolidation over here, this yellow line, that's around 105. And maybe coming just a little bit lower to get into the meat of this consolidation, that if that access support, I think that could potentially be a really nice dip buying opportunity, shake out some over leveraged longs before launching higher. That's kind of how crypto tends to work. A lot of people get leveraged, whether it's the upside or downside. If people think this is starting to collapse, they go leverage short, and that's when we see it squeeze up. If we think that, if everybody thinks that, it's going to be going up, that's when it goes down to shake out those over leveraged longs, and then it can go up. So good to be cautious about that. But then looking over at Ethereum, this is actually performing better than Bitcoin as far as I can tell. Bitcoin down about 0.8% based on the closes here in Webull. Not as good as looking at TradingView, but 0.8% down for Bitcoin, while Ethereum is up about 2.3%, trading around $2,700. So as you can see here, if I remove my drawings, looking pretty nice there, but also it does look like maybe it's getting into some resistance around 2,700. That does kind of make sense. But as it does continue to test these levels, we can see that the RSI is pulling back. And so that is going to be, I'm not sure, that might be hidden bearish divergence with this being flat and that pulling back. But we can also see that we have higher lows here, and the RSI, I might sneeze. Man, I've had like a little sneeze in my nose, and I don't want to do it with the mic on. So sorry about that mute. I didn't sneeze. It might come to me later. But what we can see is higher lows here, The RSI is kind of flat, and so that's hidden or weak bullish divergence, the flatness here with the lower highs. That's hidden bullish divergence, I believe. And so, yeah, I mean, it's kind of, a toss-up which way this is going to go, in all honesty. But if this does come down to around 2,300 or 2,350, I'd be really excited about it. I've been thinking it might be pulling back to around 24, kind of revisiting the lows over here. So this 382 from this Fibonacci retracement in yellow there, going from the lows here to the highs here, that is right around a price of 2362. And so, my thesis is really just like if it comes below 24, maybe to 2,350, that could be a really nice level to dip by. And so personally, I do have a notably sized dip buy there. It's basically the amount that I stack in a week. I would buy at that level. And yeah, but I think that Bitcoin's going to outperform. And actually, this is a little bit of a tangent, but a video I was just watching before starting the stream. I'm just going to pull up the channel here so I can go over to my subscriptions. And this one over here, this is, with Arthur Hayes. He, interesting interview. He's just like, not at all about the BS and stuff. If he doesn't know something or doesn't know about a coin, he does not care. But he basically talked about how Ethereum is like the most hated coin right now. And, that's effectively my thesis, is that Ethereum could be performing really nicely. So, yeah, I mean, I am excited about ETH. But anyways, let's get into the ticker list. That is going to begin with LAC, which is Lithium Americas. Ticker symbol LAC, which closed on the day at $2.78, hit a low of $2.72. And I don't know if you guys remember this. Maybe I mentioned it, I think, in a prior one of these streams. I did have an alert at $2.75, and I nearly bought some at $2.69. But my order didn't end up getting filled. It was I think right around $2.69. I placed an order a little bit lower because I didn't want it to get filled at like a fraction of a penny. Sometimes that happens and it's annoying. And yeah, I mean, I did not get filled. And so, yeah, I got left behind. But the thing about this that concerns me a little bit is we've seen a downside move and some consolidation now. So there wasn't a clean bounce around 270, 266 was the low. We did go up from there, but it's really just consolidated, just like it consolidated over here, just like it consolidated over here, or at least somewhat similar to it. And so while I do have, some trend lines that do suggest that it could be at some support. So like this green trend line here goes back to the lows from August 5th of 2024. And I believe the low here is a little bit off of September 6th. I'm going to go with September 9th. We will see if I'm right. September 10th, off by a day, but better than September 6th, which, is kind of typical for a low there. That was a high in the UVIX. I know that one. But yeah, those are the two pivot points, two pivotal levels. And we did, bounce, test them here, although we did break below and then bounce. Over here, we did notably break below, but we did recover it. And so, yeah, I mean, I don't think that this arrow is going to play out. I think that this is going to end up being a bear flag. Maybe I'm wrong, but I just wanted to throw it out there because I did not end up establishing a position in LAC. And at this point with the consolidation, I think that it could be going lower. And so with that being said, I'm just going to I need to move this thing over. I'm going to do a Fibonacci extension. So from that high at 331 to the low of 266, then up to the recent high that we saw on Tuesday, that should give us, let's see, I'm actually just going to see what that high is, 288. I was just going to make sure that those levels are correct. 288, 266 over here, and 331. So that looks good in the proportions. Let's not go with all these other ones. Let's just do the 100%, which would be basically the distance from here, the top to the bottom, but taken from here, that would be where that distance, that extension would suggest where we could be going, which could be down to around 223. And what do you notice about that level? There's this blue dashed line, and blue dashed lines for me correspond with gaps that have not yet been filled, and that blue dashed line is 2 cents below that 100% extension at 221. That corresponds with a gap that was formed, wow, back over here on September 10th, on that day we close at a price of, you guessed it, 221, gapped up and did not fill that gap. And so maybe we do fill that. I'm not sure. Or maybe that doesn't happen. And anybody greedy enough to wait for that big of a move down gets left behind. I have no idea. But anyways, the point is that I think that this could be a bear flag and then it does break down. So I just wanted to point that out. I thought that there could be a V-shaped bounce. Maybe we don't see it. So good to be cautious there. But then anyways, the next one on the list is going to be URA, ticker symbol URA, which is the Global X Uranium ETF. The main reason why I wanted to look at this one is because I am still holding my one lone share of AAPL, and I noticed something in that chart today that makes me think it could be, pulling back, and so I just wanted to look at uranium to see what's going on there. And so this ETF did close at 32.90, being down 0.21% on the day, but in the overnight trading, it is up about 1.5%. And so the thing that stood out to me, let's see, if I look at it, we can see actually maybe it's not so bad. Well, number one, we see this gap up and we see volume diminishing as, basically price holds. So maybe that's good that price is holding up there, but we're seeing these like wicks to the upside, hitting a high today of 33.40, maybe getting rejected. There's not enough buyers to push this up to hold it up at new highs because it was red today. It did close 7 cents lower than yesterday's close, apparently, which was at 32.97. So yeah, just 7 cents lower today. And with that lower volume, maybe it could be pulling back. Now, also, if we look at that RSI down there, just kind of looking at the past two, RSI is at 86.71. So definitely in the overbought territory, which is above this orange line here at 70. Above that is overbought. And so with it being at 86.71 after yesterday was at 87.5, that is pretty overbought. That does suggest that a top could be in. And if we look in the past, over here we saw RSI hit 79.47. That was a top, and then it's really, just hit lower highs after that, as well as with the RSI, this one being lower than the one over here. But now we're putting in a higher RSI, which does actually correspond with a higher high in the stock price. So that is not bearish divergence. Bearish divergence would be when either the highs in the RSI are opposite of what's in the stock price. So here, if we're seeing higher highs in the RSI, we will want to be seeing lower highs in the stock price or the ETF price to suggest bearish divergence, or vice versa, lower highs in the RSI and higher highs in the stock price. Again, bearish divergence. Or no, I think higher highs in the stock price, lower highs down here, that would be bearish divergence. The other way around, lower highs in the stock, higher highs in the RSI, that would be hidden bearish divergence. But yeah, we're not seeing that. I just think that, volume pulling back, RSI being, kind of, really overbought territory, really overextended, we might need to see a little bit of a cool off, maybe to retest, this yellow downtrend, which is the top of that parallel channel you see there. And, also this gap that was recently filled. Lots of levels here. So maybe do something like this, pull back to those levels, test them as support, and then go higher, or, don't go higher. So, basically the point is that we could be seeing uranium pullback in the short term. And with that being said, that applies to the next stock over here, which is AAPL, ticker symbol OKLO, which closed today at a price of $55.24, up about 2.5% on the day. And in the overnight, it's up another 2.5%, currently trading around 56.65. If we do look over the 10-minute time frame real quick, we can see that it is up some. but it is below the highs that we hit during the day, which was 57.57. Again, with repeating numbers, maybe it's a good luck charm, maybe it's a topping signal. I have no idea. Maybe it doesn't mean anything. I just think it's fun. But yeah, I mean, I started to notice, hey, maybe this looks like it's putting in a hammer candle, which is, whether it's on the top side or the bottom side, it's a potential reversal signal. And with that being said, lower volume, just like with the URA. But then if we do look over here, this is, perhaps where it gets a little bit more interesting. The high over here, excuse me, I got stuff going on with my throat and my nose for some reason. I'm not sure why. But the high from February 7th was at a price of $59.14. We are not up that high. We are at a lower high. But what do we see with the RSI? We see a higher high. So would that be hidden bearish divergence or none? Well, there's divergence. We see a lower high, a higher high. So that's some type of divergence. It's on the tops, on the highs. So that's going to be bearish. But let's just look, by Googling bearish divergence. And so let's just see what that pulls of. We look at some images. This is the chart that I like to look at. And so we can see the bearish ones over here. So regular divergence is when the stock is putting in higher highs, and the oscillator, or in the case that I'm referring to, the RSI, the relative strength index, is putting in lower highs. So that's bearish divergence. Regular divergence or hidden bearish divergence would be lower highs in the stock price, higher highs in the RSI. And so that is what we are seeing. Lower highs here, higher highs here. So that's hidden bearish divergence. But maybe it's not so significant since we're not seeing that in the URA. Maybe I'm, getting too ahead of myself. And in all honesty, the thing that I'm thinking about is not necessarily, is this going to pull back, kind of like what I suggested could be happening with URA, pulling back to these levels and then bouncing. Maybe I'll just draw that up there. I feel like I did just draw it up, but maybe I did that with, was it with lithium? No, I didn't draw it. So I guess I drew it up for URA, but I deleted it. Anyways, if it does something like that, maybe it's a good time to take profits on my one lone share. Kind of sad. And thinking about that, I do have this orange level highlighted at 47.78. That was the open price over here on February 12th, really just being like the midpoint if you think about this as, an M, that midpoint there. That was 47.78 or right around $48 was support there. So maybe since we blew past it, maybe it could be acting as support again, a pullback and retest of that level before potentially going higher. Excuse me. And so, yeah, I had talked about this potentially going up to, let's see, I think I got a fib extension up to like 71.21, but maybe that's me being greedy. Maybe this trend line here, that's me being greedy on the short term, because maybe we see a pullback. And, if I can sell my shares here, take some profits at 55, 56.60, where it's at in the overnight currently, maybe I want to do that, and then I could buy back at 48. While my average, it might be higher. Currently, my average is sub 28. I'd be increasing my average to 48, but I'd be collecting that profit. And yeah, so I think I might want to do that, but I would like to sell higher than the high over here at 59.14. So I do have a limit sell order. I believe it's 60.54. I may be mistaken. Somewhat of an arbitrary number. I'm not sure. It's, I think, 2.2%. Let's see. It's a 2x plus 20%. And that puts me at, I think 60.54. Maybe mistaken about that. But yeah, it'd be nice to just sell up there my one share. So it's, really not a big deal. If it doesn't get filled, whatever, I can just hold on the pullback. But yeah, so I just wanted to share that. I think that's, an interesting thing. I was planning on holding at least up to 70s, whatever. But seeing this, maybe seeing that hidden bearish divergence, maybe we're going to see a pullback to 48. And so maybe what I want to do, I'll be alerted if it goes higher, but maybe I want to create an alert at 48. So let's do below 27, below 28. I'll still leave those because that's around my average now. But let's just do 48 there, and I'll make that below. So I will be alerted if it goes down there, and then maybe, I want to consider bringing my average up if that does happen. But anyways, talking about taking profits, I thought it'd be interesting to go over GameStop because GameStop, ticker symbol GME, did come down pretty massively today, nearly 11%, closing at $31.21. Here we can see this massive bearish engulfing candle there. So not really looking so good there. But I must say I did kind of talk about something like this potentially happening. I believe a couple streams ago. I think I glossed over it yesterday. But yeah, I mean, this is still happening. So for me personally, I bought the dip at $32, at $31. Let's see what was the low, 30.73. So I did not buy at 30 because it didn't go that low. But yeah, I mean, I have been adding more to my position, which my average is above 23, but it's below 24. It's been going up a little bit because I've been adding up here, but not super aggressively to really throw off my average. I just think that this move is not necessarily over. I think it just needed a little bit of a cool off period. And so maybe we see that maybe corresponding with earnings. Also with GameStop, we got the news that they now have Bitcoin on the balance sheet. So that's kind of exciting, but it happened to correspond with, this pullback in the markets, and that's corresponding with big volume there. So maybe this could continue lower. So coming back to 30, coming back to 29, I would be excited about that. For shares, I did not take profits on shares with GameStop, but I did have a contract that I thought it'd be interesting to go over. And I actually am still holding one of them. I was holding a lot of these contracts. This is the $80 strike call that expires June 20th, so less than a month from now. Kind of risky. And thinking about this, because this is the monthly and quarterly OPEX, it's also like the midpoint of the year too, so it's, a pretty big options expiration. And last year, this date also corresponded with, a lot of volatility, stock going up. And what I should have done, because who knows, GameStop is currently at, what did I say, 31.21. The contract here with the strike of 80, maybe price doesn't get to 80 by June 20th. And so this contract could very well, I suspect, will be expiring worthless. So I wanted to take some risk off the table. And so because I'm fairly new to options, trading them, I have to kind of factor that in. I'm not necessarily going to be able to get like 4X's, 10X's, whatever, like some people can get. Like, just look at this move here from the low here to that high. That is, 500% swing. For me being kind of a novice with options, I'm not going to be able to do something like that. And since I had started buying these contracts a while ago, back in 2024, I think it's good to, at least not lose money on contracts. That is, progress. So my average is just one contract left, but my average was for all of them 70 cents, and I was trimming on the way up to 70 cents, being a little concerned that they'd be going to zero because I experienced that with Neo. But I was able to close the majority of my contracts at 84 cents, which is a 20% profit. But then I just held one contract, kind of just thinking, well, maybe GameStop does go up to 80. And not that I would hold this to expiration, maybe unless it's going to go to zero if the stock really dies down. But I kind of see, just like I was talking about with, let's see, was it the other ticker was AAPL, just how there's kind of like an M pattern. And so the midpoint of that M is right around $3 here. So from 60 cents to $3, there's some potential nice profit there. Although you notice 61 cents, I am in the red if my average is 70 cents. But, that translates to $70 per contract, and I just have one contract, so that's $70. If that does go to zero, it's not the end of the world for me. And, I just like to hold it for fun, but definitely very risky. I think it's actually bad to be buying these contracts. And since I am talking about GameStop contracts, let's just flip over to some data over here. So this is that $80 strike call that expires in June that I hold one contract on. So the low actually for today was 44 cents. Whereas yesterday the high was 133. I think we could have seen that in the Webull chart. Yeah, I mean, I think it's good to be taking profits, or at least, managing that. But what have we seen with the open interest? It's only been going up. So I feel like that with this $80 strike, just because it's cheaper, it's about, at most about $100 per contract. So it's, not thousands of dollars. It's somewhat affordable to risk some money on. But yeah, with the $80 strike, it being very far out of the money, I feel like this is a more retail FOMOing into this when this is actually a time that it's good to be selling. And, so we did see that with the massive pullback today, but maybe we see a rally into the end of the week. The contract for GameStop that stands out to me as being one to really be paying attention to is the $20 call that expires in 22 days on June 20th. This is the one that's suspected to be held by Roaring Kitty, but what do we see here in that open interest? It has been going down, so people have been taking profits. I feel like that's a smarter thing to do, but also just look at the premium here. That's $15. That translates to $1,500 per contract, whereas for this other contract, it's around $1. It translates to around $100 per contract. So yeah, a little bit different there, but I do think, it's good to be taking profits on these contracts, especially if they're very far out of the money and they expire within a month. But that's just kind of the way that I like to do it. I like to be a little bit, cautious there. But if we do look at the max pains for GameStop, I do believe that the max pain for this coming Friday, the 30th, yesterday was $28.50, but now it looks like it's $30. And so if we do look over here, it says $28.50. Yeah, so I believe the max pain has been going up, but we are still above it. So the max pain is at 30 for this week as well as next week. Then it comes back down to 27, 25. So there's still some gamma squeeze or gamma ramp potential with GameStop. But if I do, let's see. Oops, I didn't want to do that. Sorry. If I do come back to the list over here, GameStop, yeah, 31.21. We are still above max pain. So maybe this cools off a little bit. It gets people to panic. For me, I'm excited to get more shares, although I'm not buying more contracts for this. And then maybe we see, a rally either, after earnings, maybe towards the end of this week, or as we get those future max pains that are $27.50 for the 13th and $25 for the 20th. Maybe we were able to go back up around those dates, or maybe price actually pulls back down to those levels. So good to also consider that aspect. And then also wanted to go over AMC real quick because this one also not such a bearish engulfing candle like what we see with GameStop, really completely engulfing the previous day's trading. So with AMC, ticker symbol AMC, did close at $3.46, down 13.72%. So while it doesn't look as bad, it's a pretty big downside move, but that was following, 23.77% up on Tuesday. Still, got this gap below us. So I actually think that's looking pretty good that it didn't pull back all the way and fill that gap. Maybe there's, going to be a gap left behind there. So yeah, I mean, I just think that this is a good, view. Like, it would have been good to, let's say, sell all shares at 408 at the high, just hypothetically, let's say, because then you could buy them back at current price around 350. You can get more shares for the same price. But yeah, as far as shares go, I know it can be tough for people to want to sell those. But so I just kind of wanted to give some examples for me with contracts with AMC, because I did exit a contract. I did also add more to a different contract. And so one of those contracts is the $8 strike that expires June 20th. So this is pretty risky. I was trimming this on its way up. My average was 20. And I actually trimmed, I think, a good amount down here. So I think I net lost money because I exited at 20 cents and that was my average. But, I was just concerned that, as price goes up, the stock price goes up, there could be a possibility of dilution, something like that. I'm always a little bit concerned about that. So I think options are especially risky, especially when short dated, as this is becoming as time moves forward. But just the possibility that this could be going to zero, I was happy to just sell at the rest of my contracts at break even. And then the high yesterday was 22 cents. So yeah, I nearly nailed the top there. I'd be down 50% on those contracts now. So, I'm happy about that. I wish I, wouldn't have been trimming so persistently, I guess not really aggressively, but persistently over here. But yeah, I just don't want the contracts to be going to zero. So even taking a little bit of a loss is kind of a win for me, in all honesty. But because this one is expiring so soon and it's out of the money at $8 strike, I wanted to be adding to a different contract because I think that AMC could be rallying again. And so I have started to continue to add to. I did start to establish this one. Oh, and I guess I should note before I get into this contract here, this one, the $8 strike that expires in June on the 20th. I was just looking at, I keep track of this stuff in a spreadsheet. I believe I first bought one of these for 55 cents on October 14th. And following that, in December, we had that announcement of dilution. $8 strike. So that was kind of rough, but, I managed to get out not losing too much. I started building this well in advance of the expiration. So this is not something I started building just recently. So just wanted to note that all of these contracts, I try to enter contracts at least 6 months before expiration because it gives me time to maneuver and or exit if I recognize that I'm wrong, whatever. But anyways, this other contract, I don't know why I have this measurement up here. I was fantasizing about how high it could go probably. This is the $20 strike that expires in January of next year. This hit a high of 32 cents. And I'm actually going to see just on my phone because I was adding to this. I believe I added at 25 cents, 20 cents, and the low for the day was 18 cents. I did add at 18 cents. And my average, let's see, I've just got to pull it up. Sorry. My average is 31 cents. I've just got 9 of the contracts, so nothing too crazy. But I could have exited effectively at break even today, but I did not because I think that we will be seeing another rally. But interesting, I'm just going to pull up the other list here, the chart over here, but interesting to look over at the contracts over here. So that $8 strike that expires in June, what do we see? Buying of those contracts, open interest continuing to go up. Really risky after such a big move. But then the $20 strike, we see $20 strike for January 16th. We actually saw some risk being taken off the table. So I think that was actually a pretty good move. But still, the open interest is 100,000+ contracts. This is one that I've been adding to because, as it pulls back, and then I will probably add 2 more because I think that we could be seeing another spike. It's like the spikes tend to come in pairs. The squeezes or the ramps tend to come in pairs or in twos. So maybe there's going to be another one, and then I take profits on that. But if we do look over at the max pain for AMC, I believe last it was $3, not $8, $3. Still is $3. Price is above $3, but it would be great if we get a little bit of a bounce and close above 4, so we're at least 2 strikes above max pain. So that would be really nice. I also, I get to rambling so much. Hopefully this is helpful for you guys. But yeah, I wanted to talk about Unity software because this one has really been ripping faces off. I'm just going to remove my drawings for a second. Look at that. This consolidation here, we got, let's see, a 12.52% move today. Unity software ticker symbol U, closing at $24.54. Looking really nice here. Look at that volume behind that move. Looking really good. Maybe this is going to come back to 30 or so. Maybe it goes to 45 or so. We will have to see. But yeah, looking at the drawings, I got a lot of them over here. Yeah, I've got this doodle that, I think that we could have this nice inverse head and shoulders pattern forming maybe by, let's see, that intersection is the beginning of July, maybe August, let's say. Maybe we get up to 45 and then get rejected. That'll be forming an inverse head and shoulders pattern that would put the measured move up to around $75, I think. So yeah, I mean, I'm just excited about the chart, excited about the stock. This is one that, just like with GameStop and AMC, I took some profits on. And so the contract that I was holding, I'm no longer holding any of it, was the June expiration, that monthly, quarterly, biannual, I guess, option expiration, June 20th. That was a strike of $42, kind of corresponding with the armpit of that inverse head and shoulders or the neckline. And yeah, I don't necessarily think Unity is going to be closing at 42, so I wanted to take some profits. And so it looks like the high for the day was 26. Maybe if I switch over the 10-minute time frame, that looks a little bit more interesting. But yeah, my average was right around 10 cents, a little bit higher. I was trimming out on the way up, but I sold the majority of those contracts. It was 40 of the contracts at 13 cents, so that ended up being right around 20% profit for me. I could have made, let's see, let's just do the math to make myself feel bad. But I think it's also a good lesson in, not being too greedy. So let's see, 13 cents is the difference between 13 where I sold and the high, which was 26. So let's say 13 cents times 100, that's $13. And so that times 40 is what I could have made if I sold at the tippy top. And that's $520. So yeah, I mean, that makes me feel a little bit bad. But as we can see, it did pull back to right around 13 cents. And with the strike being $42 expiring in less than a month, June 20th, that contract's probably going to zero. So walking away with a 20% profit is better than walking away with 100% loss. Imagining, profits. So I'm not sad about that. I stuck to my plan. I was at work, so I couldn't really be doing much other than just let the order fill. But let's look over at the unusual whales data. Just going to pull up the contract that I was holding. And we can see that, look, all these buys, open interest going up for that $42 strike call that expires 22 days from now. Very risky. But we have seen a lot of bullish activity. If you see it behind me, we have the net call premium going up by $10.85 million today. So pretty massive. If I do expand that chart so we can see it, we can see, just bigger, $10.85 million increase in net call premium, whereas there was only a $1 million increase in net put premium. But if we do expand this to be going over the past 30 days, look at that. That green line going up to over $10 million. We haven't seen anything like that. The green line down here came down by negative 12.23 million. So that's actually kind of interesting. This is up. So that looks like, it's pretty bullish. And I'm just going to pull up some posts from, let's see, the Bronx Viking, because he was posting a lot about Unity. He loves it a lot. But yeah, let's see some of his posts. Let's see. And he's also been doing some NVIDIA stuff, unusual whales. Bronx Vikings, like one of the best with unusual whales, I think. Just like really impressive. But yeah, talking about Unity right here. Unity, you don't want to miss this one. Remember, alert. Special Discord announcement tomorrow. So yeah, I'm not sure what that means, but yeah, I don't know. You don't want to miss that one. I'm not in his Discord, so I won't get it. But yeah, Unity Software, net call premium still leading entire market and have more than doubled since this morning. Definitely not you. Ha ha ha. Or ha ha. But yeah, I already like that one. We can just look at that table. Top tickers by net premium Unity Software. We can actually explore this in unusual whales because I'm not too used to pulling these up. But yeah, Unity at the top, over $10 million. But the day is not over. We do see that NVIDIA is pretty high here, actually higher than net premiums than Unity, but Unity for net call premium, that is at the top of the list. That's how it's sorted, as you can see there. So that's pretty massive. So what we can do is, let's see, I was going to look at this other contract. There was some selling on this one. This is a $65 strike call that expires in January. This is actually one that I've been adding to because, I have a small share position, but this one, if price continues to go up, I've been adding a little bit on pullbacks. I think I have. I'm actually not sure. But yeah, sorry, it's just too many things going on. So I'm not exactly sure if I was buying. But yeah, we can, let's see, go over here to options screener, Superflow, market tight institution, stock screener. What was he looking at? This is top tickers by net premium. So yeah, I actually don't know how to do that. Stock screener, option screener by net premium. No. Long-term calls. Let's see. Maybe it's under resources. Sector screener, stock screener. Maybe I want to do that. But so, maybe not. Screener, sectors, options, seasonality, net call premium. So maybe I'm going to clear that. Sort that by call premium. We can see that the SPY is at the top here, but I want to see net. What does it say over here? Net premium. SPX, I should say. But yeah, Unity. Okay, so here, yeah, that's pretty big. Yeah, so I got to figure out the best way to look at how the Bronx Viking did that, but at least that's a nice resource for us there. That is looking pretty good. But anyways, enough rambling. I've got about 7 minutes left, and I need to be getting to bed at a reasonable hour tonight. So let's look over at ChargePoint here. I just wanted to note that the highs over here, if this trend line is significant, maybe it's crap, maybe I didn't draw it very well. I'm actually going to delete this doodle because I don't think that's necessarily that useful anymore. And maybe I'll delete that retracement just to kind of clean up the chart a little bit. This green uptrend. Oh, I guess I should note too, ChargePoint closed pretty high, highest it's been in quite some time, closed at a price of 76.62 cents, up over 5% on the day and going up a little bit more in the after hours, but no overnight trading for this one, apparently. And so I just want to point out how I drew that uptrend. That looks like it's based on the low from February 25th and the low from March 4th. And so, just very basic trend line there. Maybe it's significant, maybe it's not. Seemed to, hang out around here, trying to fight, get back above it here, but got rejected. Same kind of over here. And then more recently, we've just been kind of consolidating along it. But we've had multiple closes above that level, but we haven't really had any closes above that level followed by a higher close. So like over here, we had this close at, let's see, 71.45 cents. And then it pulls back under that level. Seems like it's getting rejected. Then we get a close above that high, but we had put in a higher high that was on May 21st. 73.9 cents was the high, but then we closed hitting a higher high, 73.95 cents on the 22nd, but closing at 73.31, so lower than that high here, than this red wick there, right where the cursor is, right there. You can see that going across. And so that was making me think, hey, this is kind of weak. What I want to see is a close above the highs when it was breaking above this level, not getting pulled back under and rejected. And so what we did following this breakout, this close above, we didn't get a close above that high, but after this little bit of consolidation, we did. So a close at 76.82. That makes me think that's confirmation that this trend line, if it's significant, could now be acting as support. But I also want to caution that if this does go up to $1 before the end of the month, or if it goes up there pretty violently, it's quite possible that could be for exit liquidity before this comes down. So be cautious of that. But I just want to say that I think the close here looks great. I had exited the majority of my shares around 70 cents. I'm completely out of my charge point position. Not long, not short, not in it. If it were to go up to 1, depending on how it gets up there, if it's a quick move up there, I might buy some 50 puts with the 50-cent strike that would expire in August. I'm kind of intrigued by that just for some fun. But with this here, this looks like, it's a sustainable move higher, but maybe it's negated tomorrow. We can see here the volume, 14.75 million shares traded, whereas yesterday it was 14.26. So a slight increase, but if we look at the volumes relative to the open and close for these two candles, very narrow spreads for these two candles, and the volume for today with this wider spread in the candle isn't much higher, isn't notably higher than these two volumes, especially the one from yesterday. So maybe that's a little bit of divergence. There not being volume to back up that move. And so that effectively just means that there's not big money pushing this up. It's just the little retailers, and that could just be manipulated, pumped away, or whatever. I have no idea. Not trying to be bearish or bullish here. Just wanted to point out that I think that the close above, let's see, the high over here, like I said, was 73.90. Effectively, a close above 74 is what I was looking for, and we definitely got that today. So I think it's looking really good. But of course, that possibility of a reverse split does make me a little bit nervous. But anyways, with that being said, I'm just going to open up the chat. Hopefully it's not too overwhelming. How do I feel about Apple is what Timmy Phillips is asking. Personally, so I don't have a position in Apple. I am using an Apple product here. Also do have an outdated Apple product over here. I like Apple a lot as far as their products go, but I think that Apple's kind of lost the edge. I think that with Steve Jobs, they had the edge with so many things. I don't think that there have really been that many breakthroughs with Apple. Really, I think that Apple's been kind of tagging along with Apple Intelligence. Google Glass came out, which was a little too ahead of its time. And then the Apple headset thing, whatever that's called, it was like too heavy in the back. That was also like a little too ahead of its time. The battery weighed it down. And Vision Pro, is that what it was? And I feel like Apple really missed it by not venturing into cars. Because, what did Trump say when he got into Elon Musk's Tesla, the red one that I think either Trump ended up buying from Elon or Elon ended up giving from him? I don't know what it was. You could say it's corruption. Who cares? They're both very wealthy people. Wealthy people going to do wealthy things. But what happened when Trump got into the Tesla? He said, everything's computer. And so if everything's computer, where the F is Apple with their Apple computer? So I feel like they really missed something where like Tesla is doing all of this stuff where it's like they're not just a car company. They're doing all of these other things. Apple's not just a computer company. They're not just a phone company or an iPod company, They have been venturing out into other things. But cars, I think they really missed that. And yeah, so I mean, I've been unimpressed by Apple as a company. Also, it seems like Tim Cook, Tim Apple, has been kind of pushed around by Trump with. I'm just going to delete all the drawings that I have up here because they're outdated. But with Tim Cook talking about going from China to India. Trump really kind of strong arming him, wanting him to be producing those phones, manufacturing them in the US. I think that Apple could be losing its edge. And so that's kind of like my not really looking at the charts thesis on it. But what we can see is this is actually kind of interesting. I don't really like, I'm actually going to pull it up in TradingView because I don't like the way parallel channels work in Webull, in all honesty. So Apple AAPL. So let's look at that. So this, what I see, I guess it looks a little bit steeper in this kind of time frame. But what I see, maybe you see it too. I want to get parallel. So, just from this, I believe all-time high, right around there. The open, maybe, I don't know, this is going to be kind of rough. But yeah, I mean, maybe it's a little bit wonky. But man, that looks like it's not perfect. Maybe I could just, I don't know, definitely not perfect. But yeah, I mean, it seems like there's a little bit of a parallel channel going on. Let's see. Also, we got this massive volume here. With that being, whether it's green candles or red candles, whatever, this is like, we're hitting lows. And so with those hitting lows, so, just like, picture it like that. Let's say it's one big candle there. That's, just like one big red candle there. And so with volume kind of to match that, maybe you could think of it as, buyer stepping in to buy the dip. But, oops, I need to hold it down. But what we have is, that big spike in volume. And so that doesn't really give me that much confidence in it, that there was so much volume on that downside, not a lot of volume here pushing it up. But, maybe I'm interpreting that incorrectly. I'm not really sure. I want to delete this doodle that I have there. Why can't I delete that doodle? Oh, probably because I'm doodling in attempts to delete that doodle. But yeah, what we have is, I guess, maybe this is a good sign from there. We have an upside move and then, kind of consolidation. Maybe that's like a bull flag. I'll leave it as red. It's like a red bull flag. But yeah, so maybe I want to delete that. Gosh, I keep drawing stuff. So I want to delete that parallel channel and maybe bring this back. Got that volume down there, so maybe that's a little bit annoying. But I think I can hide that for just a minute. And so, yeah, we could see that here. And actually, maybe I do want to consider the volume because we had this big spike in volume over here, as I talked about. Volume, I'm going to adjust this again just so we can see that volume. Volume has, what's going on? Volume has been progressively decreasing. And so I think that's a good sign that this is up, volume's decreasing. And actually, I think if I double click on the chart, I think RSI will pop up down there. And so we can see that, with this is massively oversold, it looks like, based on that RSI of 20.04. And then as this goes up, higher lows, this one's still higher, higher lows. We also see higher lows in the RSI, but this looks like it's kind of coming down a little bit. So I actually think that shorter term, maybe this is looking good, but generally, like for me, I've just not really been impressed by Apple. I mean, it's like they add another camera onto each phone, or they have computers that have different like colored shells or whatever that that's kind of like going back to old school Apple. That was the thing that made them really cool. Or not necessarily old school, but Steve Jobs Apple. And so yeah, I don't know. For me, I've just not really been too impressed with Apple. I feel like they're kind of falling behind because, yeah, I mean, it's like, who do you think of with with AI? You think of like ChatGPT, or personally, I like Grok a lot. Also, I think about like Google with, is it Gemini? There's a helicopter going by, so maybe you can hear that. Sorry about that. If you can hear it. Yeah, I mean, I just don't think about Apple Intelligence really. I have not really been too impressed with. I'm going to say SIRI. I'm not going to say it because then my phone will talk to me. But yeah, I mean, I think that Apple's fallen behind by not getting on board with an Apple car. I think that would have been, wow, Apple's making a car. This is insane. We would have gone crazy. Everybody's got to have the new Apple product. The Apple product's a car, got to get it. So yeah, I mean, I just think that Apple's kind of fallen behind. And in this space, in the technological space with AI, you don't want to be falling behind because then you're just going to be playing catch up the whole time. Because AI is like, once you get ahead, boom, it's going to explode. And if Apple's fallen behind, yeah, I mean, I think that that could be of some concern. So I'm just going to note it here that I covered Apple. And then I see, yeah, and so Timmy Phillips, hopefully, sorry, I'm sorry if I'm saying both names. I just read what's on the screen. I'm like, is it Anchorman? I just read everything that's in front of me. But yeah, hopefully that was helpful for you. Yeah, for me, like in this market, I've just been unimpressed by Apple. If I wanted to be in a bigger tech stock, to be honest, I've been slowly building up a Tesla position. I've been kind of intimidated by it because of the share price. Apple's not too different. It's not much lower. Actually, let's see. I'm just going to add Apple to the list here. So we can see, oops, Apple, 200, whereas Tesla, Tesla's not on the list. But anyways, yeah, I won't pull it up. But yeah, I mean, I just think that Tesla, yeah, like Tesla's doing a humanoid robot. Like, what company do we think of when we think of innovative technology these days? We don't really think of Apple. I don't really think of Apple. I think of Tesla. Even if some of their products are somewhat controversial, like some people don't like the Cybertruck, I think it looks super cool. But for me personally, I probably want to get one, A, because I don't have enough money, and B, because it's just a little too beefy for me. If I did have enough money though, yeah, I'd buy a Cybertruck. Those things are pretty cool. Whenever I see them, I saw one maybe 2 days ago. I went to the grocery store and we got some Tesla superchargers. And there was a Tesla Cybertruck there, and I was just walking by looking at it. So, I mean, I like Tesla a lot. But hey, sorry for going on and on and on and on. I see your comment there. I can definitely look at HOLO. I will pull that up, but then I will end the stream because I need to get some sleep. I like crash out at work every day because I'm super tired. So HOLO, for me, they did just have a reverse split, 1 for 40. So that's like all these levels down here, these white lines, those are levels I had previously drawn. So I'm just going to delete all of them because they're not going to be useful. One thing, rule of thumb that was mentioned to me by, I believe, Quodo. I don't know if he still watches my stuff, but rule of thumb, if you go back 2 years and the stock price is above $1,000, they've been doing too many reverse splits and they're going to dilute you out of a position. And so if we do go back 2 years, let's just see. I'm just going to make this easy. I'm just going to do yearly candles. Actually, this year's not over, so maybe that's unfair for me to do. I'll do daily. And actually, no, I'll do monthly, and then we could go back to the month of May 2023, I guess. So what was the price the month of May 2023? This is not looking good. Yeah, so we can see the month of May, it closed at a price of $20,000. So I think it's quite possible they're going to continue diluting. There's not necessarily a good strategy there. I mean, in all honesty, it's up 72% on the day. So yeah, I mean, if you want to gamble on this, if you bought yesterday, it was a good gamble, or 2 days ago, it was a great gamble. But yeah, I'd steer clear. Market cap's $50 million. Not my portfolio, but there are people that we interact with, peers, retail traders who deal with $50 million, or like millions of dollars is not that big of a deal for a company. $50 million, having just done this reverse split, stock around $10, the low here 5. Sure, yeah, that was a 2x, but I think that you'd be better off gambling with something like GameStop, Unity Software. I think that there are a number of other technologies that are, I feel like, less risky, but still with 2x potential. I think this just seems like a total gamble, in all honesty. And after having gone up 72%, what could be done here is a Fibonacci retracement. So from that low of 537 up to today's high of 1182. Let's see, let's get that just right. Let's see, 50% retracement. Let's see that. So we got the 50%, the 61.8 or the 618, and the 786 or the 78.6% retracements. So all of those, this could be coming back to $8.60 or maybe even around $7. Like the levels over here, this consolidation at the tops there, those consolidation highs, that could be support because that level was resistance here. Couldn't get price to close above this level here. That's around $7. So I could see HOLO pulling back to 7, and after it pulls back to 7, just like, over here, what percentage move was this? That was 32% move, so not as crazy as 72% if we go over the course of these 2 days. That was 50%. But then what happened over time? It just came down. And so I think that if we were in a clear bull market, sure, have fun, gamble with this. I mean, in all honesty, in whatever kind of market, have fun, gamble with this. You do you. But I just think that in the market that we're in, where we have pretty massive spikes in volatility in 6-month increments, somewhere around there. Tariff wars, tariff not wars, actual wars, trade deals, cuts, interest rates, all of this stuff. I think that there's just a lot of volatility. And with that, it's possible we're in a bear market, that we've started one. We're not at new all-time highs yet. I don't think that's the case, but I just think that it's a time to not be speculating on stuff that has pretty small market caps, that's been conducting reverse splits to the point where just 2 years ago, we were seeing prices above $1,000. So yeah, I think that this is really risky. I will just say that I think it could be pulling back to 7. If it doesn't get to 7, kind of the same idea. The consolidation highs over here, maybe it pulls back to around 8. So that's about a 20% reduction in price. So good to be cautious. Have a plan. Don't trade more than you're willing to lose with something like this, because it could most definitely be going to zero. And it could be the worst kind of zero, where, you just get lured into it buying the dips, but it never spikes high enough to get to break even. And then you just waste a bunch of time on it. So yeah, I'd have a stop loss clear. And that could just be the low here at 537. And then from 1041 or 10, it looks like in the after hours, it was at 984. Coming back to 537, then you're at least losing about 50% and no more. At most losing 50% and no more. So yeah, Have fun with it if you want to, but I find it to be really risky. Hey, Ricardo, what's up? If you do have a last minute request, since you're an OG fan, I will do a request for you, but I need to get to bed. So just let me know real quick in the chat. And while you do post that, I'll just do my little closing thing. But yeah, let me know if there's something you want me to go over. But as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below or in the chat. Ricardo's going to leave me one so I can go over his last minute request. And of course, make sure you subscribe to the channel for more content like this. But yeah, I'm pretty excited to see what happens with AMC and GameStop the rest of the week. I'm wondering if they could roll around. And Oklo, I'm curious if my sell at 60.54 will get filled, or if maybe I'll just take profits at 48 or maybe add back there. But yeah, I'm not seeing Ricardo put in a request, so I might just check my phone real quick to give him a minute more. And but yeah, I am going to get to bed so I don't crash at work tomorrow. So yeah, and I will be doing this again. I'm trying to do it the same time every night. It's going to be every other week based on my work schedule. So this week I'm doing overnight market preps that begin at 10 p.m. Eastern for about an hour. And then next week I will be doing pre-market preps beginning at, let's see, 8:15. Gives me 45 minutes or so before maybe I have a tough time getting up any earlier than that, or being at least in front of the computer earlier than that. But yeah, it's been a fun night. Hopefully it's helpful for you guys, and I'll see you tomorrow night for I guess the last overnight market prep for the week. But yeah, take care, you guys. Have a great